Computek really is a case where it doesn't matter how much money you throw at the problem later. If your foundation is not solid, you will not be able to rectify fundamental errors. There are enough errors for us all to make in our lifetime. We must at least try to learn from the errors of others so that we don't make those same errors ourselves. And that's the purpose on dwelling on the weakness in the preparation of the Computek case. They went to tax court and they lost. They went all the way up to the Supreme Court and they lost. And then they tried again going to the tax court on another tack and they lost again. A very expensive way. And if only somebody had applied their mind thoroughly at the beginning of the process, this would never have happened. And that's what we need to learn from. So here, in Computek's case, SARS raised a VAT assessment, some 1.2 million rand VAT output, the capital amount. Then a 200% additional tax, the standard 10% penalty, and of course the interest that flows from all of those adjustments. Now nobody looks to see why that assessment was ultimately raised. Here we have an assessment where SARS is alleging that the accounting, bookkeeping staff, acting under somebody's authority, made a willful decision to omit 1.2 million rands worth of VAT from their output tax. That's some 14 million rands worth of turnover not being disclosed. Surely you first think, was there such an instruction given that would lead us to a 200% intentional tax evasion penalty? And was there such an error that was made in leaving out such a significant amount of VAT output and of turnover that would have related to that output? Now, that is where the focus should have been. And if the focus was there, we must always look, what is the cause of the assessment, what is the cause of the problem, before we can diagnose how we are going to object to it or what action we are going to take with regards to payment or the negotiation on that assessment. But here nobody focuses on the capital. There's a focus on the additional tax, there's a focus on the penalty, there's a focus on the interest, but nowhere in the objection is there any focus on the capital. Now, the first part of the problem for the taxpayer was that they went and represented themselves in the drafting of the ADR1. Now, SARS has this lovely jingle that everybody can do your e-filing. It's so simple to do your returns now, but it isn't. And we as the profession need to make sure that we are educating clients that they can't do these things themselves. It's for the very reason of its complexity that we're having a seminar like this and people are attending to make sure that they are up to date with the necessary process for objection and appeal. It's not something that you can do by yourself. Here the ADR1 form was used because it's a VAT matter and it doesn't use the e-filing process. But what I'm dealing with here will be equally equivalent for the NOO form or the NOA form, which are lodged by e-filing for income tax matters. Trusts will use an ADR process and PAYE will use an ADR process, as will the VAT in this case. Now the taxpayer makes the first fundamental mistake by not ticking the box. There's a miscalculation on the assessment. That would have brought the capital into question, but no, there's no focus on that. They mark procedural matters and additional tax. No question on the income, which once again would have brought the capital into dispute. And procedural matters are fine, and there will be many seminars that will cover the key procedural aspects that SARS must deal with in order to constitutionally raise an assessment. But one can't just focus on those warm, fuzzy issues. One must look at the substantive reason as to why that assessment is raised and why it is fundamentally wrong. The rest come through as part of the package, but they can't be the sole or main reason why one is lodging an objection, as it was here. Now, SARS tries to encourage one. Tick as many aspects as you need to on the form, both in the manual form and in the computerized form. And here, the taxpayer does go to town ticking away. Additional tax, the penalty, the interest, other issues. But there's no tick on the miscalculation of the amount in the assessment, the underlying capital issue. Other might have got them into the door if they had focused on some of the key aspects. But they do attach a letter, and the letter re-emphasizes the focus on the additional tax, the penalty, the interest, and the warm fuzzy things about how SARS treated them during the audit. All very good and well in a thesis, but in the practical nature of life, we need to focus on the key underlying issue. What they did get right here was they did attach a letter to the form. As professionals, we should not just be lodging the bold form ADR1 or NOO or ADR2 or NOA. We must attach correspondence with that form, setting out clearly why we are objecting, why we are appealing, what we are appealing against. We still all remember those lovely trolleys that moved around the SARS building with your brown tax file, official amptelik, and nothing happened to your life without that file. People pay good money to make their files disappear or move to the bottom of a pile so that they weren't dealt with in those good old days. But now the life is moved beyond the brown file. And if they didn't look at the information that you uploaded on e-filing because they couldn't see it, didn't see it, or didn't want to see it, then you need to make sure you're attaching that necessary relevant information to your objection. Treat it that the person looking at the objection has only got what you are giving them. Would you, just with the information on that form, agree to waive 2 million rands worth of additional tax? No, you need attached to it a proper, comprehensive, detailed letter motivating the issues, referring to case law where necessary, and being factual in order to deal with the matter. We need to make sure that we don't just have the form, but we have the necessary correspondence in order to meet our onus of proof. So here they did do a letter. They got part of the process right, but they didn't go far enough. To merely say that there's an unfair procedure or that additional tax is excessive is not going to cause an assessor to review their decision. You need to put the reasons why this is not correct at 200%. Now, in the case of Computek, it's not quite as simple as this, but it's almost as simple as this, that SARS used the group financial statements figures in order to reconcile turnover to VAT and not the company financial statements figures. And nobody picks this up in the process. And all that was required of the objection process was to say, attached is page 9 of the financial statements, the group turnover. Here's page 11, the company turnover. Page 11 reconciles completely and accurately. Page 9 is the group turnover. There's no way it's going to reconcile because it's got a whole lot of extraneous matters not related to the company. Not quite as simple, but almost as simple as that was all that was required of Computek. So now they lodge their objection on those warm and fuzzy matters. And they make a clear statement in the correspondence supporting the ADR1 form. We are in agreement with the turnover figures. So not only is there no tick disputing the turnover figures, there's a positive affirmation that we are not in dispute of the turnover figures. And that is addressed by the Commissioner in their notice of disallowance, as if to tease, taunt, prod, and get the taxpayer to re-look at the turnover figures, but to no avail. There's no focus on the turnover figures. And SARS says, well, on what you've given me, I can't look at it being unfair. There's a material amount that has been omitted from turnover, a material amount that has been omitted from VAT output, and you're not giving me any reasons why, other than saying it's excessive. One needs to be clear in the notice of objection why it's excessive, what went wrong in the process, why it shouldn't be 200%, why it's merely an error. There are many things that one could have addressed even if one hadn't addressed the turnover, which was the key and fundamental issue to address. And so the objection is disallowed. Now I'm going to jump a little bit in the process to what would be Rule 10 and Rule 11. Rule 10 and 11 are when we are close to going to tax court. We've had our objection, we've had our disallowance, we've had our appeal, we might even have had an ADR process, and we haven't resolved the matter, and now we're going to tax court. Rule 10 is where SARS sets out its pleadings, essentially, and sets out the basis of the assessment. And Rule 10 is where the taxpayer responds and sets out why they are objecting to that assessment. We'll look at the rules in much more detail later, but that's a synopsis of where we are in the process. And now, for the very first time in this process, somebody wakes up and starts to dispute the underlying capital. So we've been through the objection, we've been through the appeal, and there's no dispute on capital. Now at Rule 11, somebody is trying to dispute the capital. And the issue that the court first needed to look at was whether or not it could even regard this new matter being raised as part of the objection. Is it capable of being raised in Rule 11 or not? If it's not capable of being raised, the court can't give consideration to a dispute on the capital, and if the court believes that it's capable of being added into the objection process, then the objection to the capital can follow. And the court says, no, I can't deal with this matter, because you didn't deal with it in your objection. You went as far as to say that I am not in dispute of the additional amounts of turnover raised as VAT output in the original objection. And later, in the appeal process, now the taxpayer has brought in external chartered accountant to assist them with the appeal process. But once again, they make the comment that they're in agreement with the turnover. So somebody looks at the turnover, makes the assessment that they are not in dispute with the turnover, and makes that positive affirmation both in the objection and in the appeal process that they are not in dispute. And yet, they are now trying to bring it in dispute in the process of the tax court case by way of Rule 11. The court says the only issues that you have covered in your objection are the 200% additional tax, the incorrect and unfair imposition of a penalty, the interest, and various procedural matters, and that is all that the court can look at. They can't look at the underlying capital because it hasn't been brought in to the original objection. And they go further to re-emphasize in the judgment why they'd come to that conclusion that the taxpayer has not ticked the box that there's a mistake in calculation. And the taxpayer talks about uncontested capital. Now, it can't be uncontested, and now you want to contest it in the appeal and court process. You needed to contest the issues right at the beginning of the process in order to bring them into the fray. Without doing that, and you now re-emphasize that again in the appeal process, the uncontested, and we are in agreement with the turnover. Now, pausing for a moment on Computek and looking at another court case that happened at a similar time. Here we are in the lower courts, in the Special Tax Court, ITC 1843, and SARS adds on some new issues in their Rule 10. And the taxpayer disputes this, and once again it goes to court to see whether SARS can add anything in Rule 10. And the court there said that they can add in Rule 10 because you've got a right of reply still in Rule 11, and the process hasn't ended, and therefore the process of pleadings are still open. Now, this was not covered in Computek at all, and it is a lower court case decision. But because of this decision and some other matters, some of the commentators think that Computek got it wrong. In my view, however, I think Computek got it right. You can't bring in a new issue, not a new ground, not a new amplification, not a new explanation, a whole new fundamental issue that you have previously not objected to. You are now trying to bring into the objection process. No, you can't do that. You need to get the fundamentals right at the objection process. And this is what we need to make sure, that we're covering all of the bases when we lodge our objection. Hopefully we're not going to go to tax court and tax board. We're hopefully going to resolve it in the objection and appeal process. But as things are becoming more formalistic in that objection process, we need to make sure that we are too being more formalistic. Some of the venues that I've been to, people still are living in the old days when they just wrote letters saying, I have a concern about how you've drafted this assessment. Please will you re-look at it and make the following adjustments. The process is far beyond that now. We've got a formalistic objection and appeal process, all leading us towards the tax court. We can't just do things on the slop, because that is when these sort of problems arise. So where we are in the process, we have an audit. That's going to be the fundamental starting off point for the disputes with SARS. There will be some where you just get an assessment, but the majority of the objections that we're going to draft will come and flow out of an audit. An audit then gives rise to a letter of findings. It's been hard fought by practitioners to make sure that SARS gives a letter of findings and gives us a right of reply to those letter of findings. We must make sure that we all exercise the rights that have been hard fought. So, for instance, one must exercise one's right to vote, one must exercise one's right to dispute the letter of findings. These are important rights that have been hard fought, and if one fails to deal with the matter at the letter of findings stage, you weaken the whole process later in the objection and appeal stage, because you had a right of reply. Then you get the assessment. Now you have an assessment. We're beginning the objection process, and key to that process must be the understanding of why SARS raised the assessment. If you don't have enough from the letter of findings and their response to your response in the letter of findings, you will need to make sure that you request reasons for that assessment. We'll look at that in some detail, and there are issues about getting reasons, but it's important for us to know the why in order for us to deal with and craft the objection in the client's best interest. And parallel to this whole process is the request for suspension, because if we don't request suspension, then the SARS collection authorities get into full gear, and if you're now in January, February, March for the budget time, or your October, November, these are the hot months for the collectors. They've got certain targets to meet in November for the mini budget and March for the year-end budget, and so collections are at a high in those periods. One needs to make sure one's put the necessary protection in place with the suspension of payment. And then begins the objection and the appeal process flowing from there, and that is what we're going to cover today.